Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpsummit.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome back to the analysis of the forex markets, particularly to the euro currency. Let's start our discussion from the daily time frame. If you remember, in the beginning of the week, in our weekly research, we said that that was the nice area to watch for the potential sell opportunity, since if you take a look at the weekly chart, you'll see that this swing to the upside and this swing to the downside creates the excellent pattern, bearish engulfing pattern. And since that was the significant area of support, we said that probably market could show some retracement to the upside that we should use to enter on the short side of the market. This area is attractive since this is the thread resistance of the swing to the downside, and also that is the weekly pivot point. It's 132.90. It's right here. So you can see that market has hit that area. So market has hit the thread resistance. Also, it has touched the weekly pivot point and now turning to the downside. You can see that trend on the daily time frame has held this retracement, so it stands at the bearish side as previously. Well, it tells that overall condition on the market, overall bias still holds on the bearish side, and we should search for the possibility to enter on the short side of the market. Since we didn't find any patterns or reversal patterns during the week on the intraday charts, the single opportunity that we have is just to trade and enter in the potential continuation to the downside by the trend, and we need shifting of the trend to the downside in all time frames. So let's take a look in the lower time frames. On the 4-hour time frame, you see that 4-hour time frame holds bearish, but now it's start to giving some hints of the potential move to the downside. But the more interesting here is the potential directional pattern on the 4-hour time frame, and this could be the bread and butter buy. This is for those of you who trend on the intraday charts, on the 5-minute chart, on the 15-minute chart, other words for scalpers. You can see nice thrust to the upside. Market has hit some resistance on the daily time frame, and that is also our confidence resistance, a second confidence resistance that we have discussed yesterday. Now you can see the first move to the downside from that level. Now market stands below this green line. If market will close here and will reach the 3-8 support from that swing, or maybe even a bit deeper, maybe 50% support, that could lead to the retracement at least to the 618 of that swing to the downside. That is also our previous resistance, so market could retest that level. That will also be the 618 resistance from that potential swing to the downside. That is an opportunity for the scalpers. For those of you who trade on the daily time frame and would like to enter on the short side of the market, let's remember what we have discussed yesterday. Yesterday we said that when the market shift trend on the hourly time frame to the bearish side, we could use the starting pullback from this level and the nearest retracement from it to enter on the short side of the market. Now it's time, this time has come. So let's take a look how it developed previously. So market has hit our first confidence resistance that we have discussed yesterday. It's around 131.80, 131.90. It's right here. Then it has broken it. You can see that trend holds bullish all the way until market moved. This is the second area that we have discussed. Market is trying to pass through it, but again has done this. Now it has touched the weekly pivot point, so reached that area of significant resistance at daily time frame and has turned to the downside. That is our chance, because now you can see that hourly time frame trend has turned on the bearish side as well, in accordance with the daily time frame. Since market now stands not at oversold on the daily time frame, there is no significant support levels just below the market. This is just a retracement after the significant move down the previous week on Friday. So now we could try to enter on the short side of the market. How it could be done? First of all, we need the market should show some retracement to the upside from that swing, from that high to that low, from that new swing to the downside. That could come according to this directional pattern on the 4-hour time frame. From that thrust, market could show will reach some significant support. Maybe this will be the 3/8 support right here, maybe it will be 50% support, but later it could show some retracement to the upside. We need to use this retracement to enter on the short side of the market, this pullback. More probable that this retracement will be at least 50% or maybe 618. It's very rare market shows just 3/8 retracement after the significant move to the upside. It probably will be the 618. When this will happen, you could try to enter short from that level with the placing stops right above it. So the risk reward ratio will be just tremendous, because if market will continue the move according to the daily time frame, this will be A, B, C top, D point will stand around 129, 129.30 area. So that will be the significant move to the downside according to this pattern on the weekly time frame. Your stop will be just difference between the 618 resistance where you will enter on the short side of the market and the top. Because if market will continue move to the upside, break out this level, move above the pivot point, it will shift first of all the sentiment on the bullish side. The second, market probably will proceed to the next area of resistance on the daily time frame, the 618 resistance of the swing to the downside. So anyway, this would be not logical to hold bearish position. Besides that, the hourly time frame trend probably will shift on the bullish side again. That's why it's absolutely logical to place stop somewhere above that level and wait for the development. Your risk will be not so much, not so huge. I suppose this will be somewhere 132.50, 132, 133 maybe, somewhere around 50 pips. So that is how this could be traded during today's trading session. Again, as the conclusion, just 2 words. First of all, for scalp traders, there is nice opportunity of the directional pattern, so they could try to buy this retracement that we expect. Okay, because this is high probability trade. This trade probably will start either from 3/8 support or maybe from the 50% support of the swing to the upside. Others who search the possibility to enter on the short side of the market should wait when this pullback will finish. Probably it also will be somewhere around the 50% resistance of this new swing, or maybe 618. Maybe market even retest this level. Then you could try to enter on the short side of the market by different approaches. How you usually do this? Some of you maybe drop your time frame to the 5-minute chart to watch some sell signals around that area, and the market will show this pullback. Others could try to enter just from that level without any signals, place stop somewhere above that level, and the target of this potential move probably will be the ABCD pattern on the daily time frame. That's around the 618 support from the whole swing to the upside. That's around 129, 129.30 area.